So I received a lot of questions, emails, and all sorts of messages asking me if I'm still around, if I fell off another mountain biking track. No, I'm still here. I'm still here. I just took a few days off because, well, it is summer and even I need a few days off, and I'm going to take more days off at some point in August. Looking forward to that. But we need to talk about Facebook, and that's another thing we received a lot of questions about. What to do with Facebook. If you guys remember, maybe rewind, watch a few, go back to a video maybe last week or maybe the week prior, like 2 weeks ago, one of these Facebook videos, YouTube videos, and we talked about not being long tech from a swing trading perspective into earnings season, that the better trades will likely set up afterwards. And that's actually, I think, exactly what's happening here. I think Facebook and the Twitters are probably in a little bit of trouble here. I don't want to short them into the hole, but I'm going to give you guys some perspective and kind of tell you where we are, because it's a tale of two tapes. I personally both believe in Twitter and Facebook long term, but I think right now there's going to be trading opportunities, just not right into the hole. Let's have a look at these charts here real quick to give you a little bit of, or maybe hopefully a lot of perspective. So this here is the chart of Facebook. If you sort of, peel it back long enough, and this goes back to 2013 or so, and you can see, obviously, it doesn't take a genius to see the very well-defined uptrend. And usually what I do on a stock like this, works on Google, all those big tech growth stocks, when they overshoot in the upside, I will always take at least partial profits, usually a third or a fifth from a long-term trading perspective. We will then buy again at the lower end of the range, look at where it bounced again earlier this year in the month of April or so. We bounced off the lower end of that range, and then we overshot again into earnings. And so from my perspective, we are finally seeing a much needed mean reversion move again. I don't think we're yet where the stock needs to go, and quite frankly, I think this stock needs more time to sort of consolidate. And so I'll tell you one thing. So I spoke with a fund manager actually yesterday, and I took a day off, but I still had a quick lunch with him. And he told us that his investment committee is just trying to get their head around this right now. So, and this is really quite similar to what's happening to a lot of other investment banks right now. They need to make up their mind whether they want to cut this stock more than they already have over the past few days, because a lot of people have very quick reaction to it, even on some of their trading books. And so they have to make up their mind. That's usually not going to take a couple days. That might take a few weeks. They may have to wait another quarter or so. So in my opinion, from a long-term perspective, if you believe in the story of Facebook, it's certainly a better deal now at 175 than it was at 220 or 210 or whatever it was just a few days ago. But it doesn't mean you should expect an immediate reaction to the upside. But I certainly think if you don't own any Facebook and you like the story like I do, this is probably a pretty good spot to buy some. But I do think it's going to take some time. I don't think the stock is going to ricochet right back up. I could be wrong, which is why I think from a long-term perspective, one could buy some here. But again, that's a long-term view, like a multi-year view. So I think there's enough time here to take your time, watch it a little bit, and then maybe good. From a trading perspective, however, this is a trade that we actually did last week for our clients and for the subscribers of the credit of our credit spread trade alert service. And so what we did last week, we said, you know what, this stock is finally just now mean reverting back into the middle of that channel, right? And this is now still the weekly chart. And the stock rallied so strongly up into earnings. People were very, very giddy not to move out and not to miss out on anything. And now they're getting killed. And we didn't think that the stock at that point, even from a trading perspective, was going to rebound very quickly. So what we did is we simply made a bet that the stock isn't going to go much above 190 for a trade. And the stock since, of course, has dropped, and quite frankly, we're getting pretty close to taking some profits here. But from a trading perspective, I'm actually going to start looking for bounce opportunities. Maybe the stock has to go lower into the mid 160s first. But I think from a trading perspective, there's going to be opportunities if you want to be really quick to buy it for a bounce, but you need to see strong bullish reversals, which we've not seen yet. Or once they get to a lower high and bounce a little bit, I think one could re-short a name like Facebook. So I'm going to quickly go to the daily chart, and I'll flip the camera again in just 1 second. Here we are. And if you look at this on a daily chart, yesterday we kind of had an exhausting selling day, but we have no follow through buying it. So if we were to see a follow through buying day, yes, the stock could absolutely rally towards 185, 190 with no problem. But then ultimately, I think there's going to be a lot of seller resistance coming in here, because once the stock gets back into these 190s or so, I think there's going to be plenty of people say, you know what, we're going to offload on some stock here for the time being, and then the stock might go down again. So I hope this makes sense, folks. That's Facebook for you. And again, go back to a couple of videos ago where I talked about not wanting to be blindly long these large cap growth tech stocks into earnings season, because I was afraid something like this could happen. But opportunities from a trading perspective are now setting up. So I'll see you guys in the next video. Take care.